JB here. Hope everyone's doing outstanding. Monday, August 18th, 9/11. Sorry, a little late here. Talk really quick about the market. Some names I'm looking at go from there. S&P futures slightly in the red. It's kind of like a flat open here, down about 0.07%. Small caps actually up a tenth of a percent. Probably, I wouldn't call it going to be a lackluster week, but probably some chop here today and tomorrow. Wednesday we get the Fed minutes. Typically the Fed minutes, I mean, sometimes they give a little color into what's going on, but there were two dissenters for the first time in, I don't know, a couple decades. I can't remember. Sometimes there's like one dissenter on the vote, but to have two dissenters on the vote at the last Fed meeting, that's probably going to have a little more conversation of that, but maybe you can glean some things from. But so the Fed minutes, probably a little more eyes on that. And then, of course, the big event here is Friday, 10 a.m. Fed Chair Powell. Uh, he's I get this little concern that he's gonna be like defiant and steadfast, right? And maybe that just opens the opportunity for pull into the weekend. I don't know. There's been events over the years, Operation Twist or whatever, Twist and Shout. You had Ben Bernanke, so some big announcements at Jackson Hole. So I don't know. I don't think it's gonna be a big announcement. Just if he's not either flatten his tone or somewhat dovish, it's probably not gonna be very good, especially heading into the weekend. So. Uh, that's kind of the events this week. It's also pretty much every day this week. There's some retail name reporting. We have Walmart, Home Depot, Lowe's, Target. Um, I think does Baidu report? Baba, one of those report as well. And there's only like 99 companies reporting earnings this week, so it's kind of like the earnings season wraps up. So I mean, pending any crazy headlines from POTUS, and to me, if there's going to be a headline, it's probably going to be Friday, right? Friday during the day. Unfortunately, that Jackson Hole speech is at 10 a.m. I wouldn't even say unfortunately. It's probably better that it's that as opposed to like a 6 o'clock on a Thursday afternoon. Uh, but you have to think he's going to come out with some comments on Friday, and then you have that big meeting at the White House here today. I don't know if that's going to move markets too much. I mean, if there's peace, that maybe that puts a little bit in markets, but it seems like to me it's going to be somewhat of a non-event. But I changed the range. Last week was 628, 646. We held right at that 646 handle, which is the upper Bollinger Band on the SPY right now. Um, I upped that. I think it's 631 to 649. I think that's what it is up there. So also, if you take a look last week, the 642 handle was the lows like for 3 sessions, and also under that 636. So if we break 636 today on some kind of crazy shenanigan headline, or just finally the sellers come in, then I might be more apt to possibly add some put hedges. Funny weekend reading, right? I mean, if you for over the years, there's always these points that people put up, and typically these points come up when the market's showing signs of weakness, right? The market's selling off, it's down for a couple days in a row, and then all of a sudden it's about the inverted yield curve, right? And every inverted yield curve has predicted a recession with 100% certainty, right? So no recession has happened when there's hasn't been an inverted yield curve beforehand. But you can make the case. I mean, if you go back 50 years and make that as your case, and yeah, of course, you can go back all the way into the in time and say, hey, the yield's inverted back in 1920, and we're in a recession in 2025. But it's kind of just comical. So now the yields finally reversed. So they weren't inverted anymore last year. And now we are at the biggest spread in regards to the reverse of it, right? So the 30-year and the 5-year at their highest spread in over 5 years. But no one really talks about that, right? So, back in February, March, April, and a lot of these folks, and they're still kind of chattering that we're going to be in a recession or coming in a recession. They were talking about the recession, and now, the yield curve's not inverted anymore. But rants for other days. So that's kind of the overall market. And that's, probably some chop here today. I wouldn't be surprised. 640, 642, 644. Bounce around a little bit here this morning. US dollar is stronger. Yields are kind of flat here. All right, that's overall market. So now just quick on individual names. First, I just want to talk about VKTX. I don't know why I didn't put it on the watches this morning. You had NVO with some positive news after the close Friday. They were able to use their GLP-1 for NASH. So if you don't know, back in the day, I used to follow this company, Intercept Pharmaceuticals. The stock was like $10, went all the way up to like 350, $400, and then it bounced around for a long time after that because the last unaddressed market in biotech, or the large unaddressed market, I wouldn't say it's the largest, was NASH, right? Metabolic, pretty much scarring of your liver, right? So there wasn't any approved drug to treat that. And then finally, Madrigal, MDGL, which I've traded when it was $60, $80, that's all the way up to 360. They finally got a drug approved and it's on the market. And now you finally see commercials for that. So it was like a whole addressable market. So Intercept was one of those companies that was going to go into that space as well, and they got acquired, taken private. But now on Friday, it looks like GLP-1 is possibly get approved to treat that as well. So to me, I always talk about these GLP-1 drugs as there's an addressable market that you don't even know how big it is yet. People just think it's the weight loss or the diabetes or the sleep apnea. I talk about the addiction side, and now you talk about this NASH and MASH. So just to me, it opens another door for these drugs. And then VKTX, right? So I was looking at the end of the week, my August strikes expire. I'm like, do I add some more strikes? And for some reason, I get this feeling that I don't know, it's going to be really great data, and maybe it goes to 55, 60. I don't know. I'm still trying to wrap my head around some risk reward trades. So don't I might add some strikes, and I was looking at the September's. For some reason, I think they're going to announce that at the first week of September. So maybe I'm wrong here, and I hope it rockets to the moon. But I'm just being patient. All right, so that's VKTX. I'm not going to talk too much about that, but don't be surprised if I had some strikes this week. And now some other names. So MDB, I'm talking, especially the last couple of weeks, trading it on Fridays. Some great lottos it's provided, and then it sold off, right? Amazon Web Services came a little. It was less of, to me, a demand issue and more of a supply issue, right? Amazon Web Service, their supply is constrained, so their numbers weren't as great. Their margins were a little lower, and then you see these cloud names selling off. And MDB sold off from 250 all the way down to pretty much under $200 last week. Just on that, I would assume it's on AWS. Who knows? Maybe it's just profit taking. But to me, create opportunity. So I was looking for weekly strikes on Friday, and then I'm like, let me go further out. I get those 230s into this week. And then it ran, from 208 all the way up to 218. The weeklies would have paid out too if I'd added them, but I was a little patient and I was a little late, I guess you would say. So got the strikes into this week. And now this morning you have Citi upgrading their price target to 405 from 395. Kept their buy rating, and they put it on like a 90-day catalyst watch. Only good stuff, right? It's not bad stuff. It's gapping here over 220 this morning, so almost 224. I don't know what my 230 is going to be. They're probably going to be 150, 200% at the open, I would guess. So the rationale here, I'll lock some of those in to cover costs, and then I might look for some higher strikes, depending what it's doing at the open and the premiums look like. Maybe some 240s, 245s. Call me crazy, especially if the market finds footing this week and there's no crazy pull. I could see that really starting to bounce. 200-day moving average right there, 231.26. So that's a big spot. All right, so that's MDB. And now LULU, right? And, last week at this time, I was talking about my UNH calls, which I carried into the previous week, right? To the 270s, which were they 48 cents up to $37, whatever. Crazy stuff. Of course, the hard part with options is the hold, right? And, if Buffett's filing for his 13F came out Wednesday night, that would have been great for my calls, right? But instead, he has to do it Thursday night when the option expiration is the next day. So I still locked those in for over 1,000%. But needless to say, I think some of these names that have been destroyed and beaten up, some of them on recession concerns, right? I think Lulu and RH, some of these other specialty retailers have been beaten up over since the start of the year because folks are worried about consumer spending and the recession worries and things like that, which have been proven unfounded so far. So to see it down here, I think it bounces. So I'll still have those 215s. I had some 230s for the following week. I'll look to continue to manage those positions, lock some in to cover costs, ride the rest. But I think it's off to the races, and I think 220 plus this week. Call me crazy, if not higher. And then just quick on some other names. A line I was watching for a bounce. Well, we're watching last week. You have the CEO insider buy. You also have the stock getting destroyed on earnings, which I thought weren't too horrible. The company announced another, just that they're going to purchase over $200 million in shares. So I think there's a lot of positive catalysts. The chart is pinching here. I think it trades north of 150. Just needs a little kick in the butt. So maybe this is the week. Don't be surprised I had some spec lotto calls. And then Target, right? I think I traded Target a couple quarters ago for premium build into earnings. Here's a name that's just kind of fallen on its face since the start of the year, down from 140. And Walmart had the same issue. I don't know if it was into the tariffs, and then the stock did really well after they kind of it wasn't even a great quarter. They just kind of shook off the tariff worries, right? So I don't know if, hopefully, and my thought would be that a lot of the tariff concerns are already baked into Target, and they'll post a decent quarter, and that'll be enough for it to soar. It's a 9% implied move, so the premiums are tough, but they report Wednesday before the open. Might look for some strikes on Target today just for premium build, lock some in, cover costs, ride the rest into earnings. And then, CGC and IIPR still think that the cannabis space is going to catch fire at some point. So just going to continue to hold those pretty much freebies, except for the other strikes I added on CGC, the Januaries. And then Joby, right? So you take a look at Joby and, oh gosh, um, it broke under the support. And I keep talking about it, especially after its earnings and into earnings. I thought the risk reward on Joby is a little more skewed. I'm not, or fairly valued, right? I don't know how much higher it can go outside of any catalyst. Maybe it's next earnings or another big update. So for now, I'll just continue to be patient. I'll just hold the last of those freebie October strikes. That'll be a name, like, I'm not saying I'm not watching, but I'm probably not going to add any more calls just yet on that one. So if you don't hear me talk about it, it's not like I'm not bullish the name. It's just there's other opportunities near term. I think that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.